What are your guys' thoughts on the banks as we enter 2023?
People that have historically have had a large percent of their money in the checking account should not have that in their checking account. So, the money market funds, you can get 4 and change percent, whereas your checking account, you're still getting 1 basis point at Bank of America, right? So people should be pulling their funds from checking accounts and parking all excess cash in other money funds or high savings account funds. And so that's what I would do.
If you think about a bank, what its moat is more than anything else is the fact that they have the lowest and cheapest cost of debt capital that tends to be very sticky, right, in the form of deposits. However, this cycle, there's actually competition for that, and very stiff competition in the form of, as Porter just said, 2-year Treasury T-bills, where you're actually getting a higher rate of return than you are on your deposits in your checking account or even a CD for that matter. In addition, for corporations, there's this new little tool that the Fed came out called the reverse repo facility, where you have the ability to park your money there, get daily liquidity. You have as much safety in the reverse repo facility as you do as a bank, and you're getting about 200 bips extra there. So this is a long-winded way of saying we expect a tremendous amount of deposit outflows from the banking system. If that continues to happen, that is a lot of stress on the balance sheets of financial services. And we're not talking about them going under. What we're really talking about is that you probably have seen peak NIM, and then probably 2 to 3 quarters afterwards, you start to have a credit issue.
I talked about on the podcast with Mike Wilson about the SLR, which is the banks are forced to carry X amount of capital against treasuries. I actually believe that will be one of the things that the Federal Reserve comes in and
100%.
eases.
If they do that, Danny, they better be right, because if they're wrong, we're having a massive banking crisis.
If they do that, then our banks are going to migrate towards the way of Japanese banks and European banks, and those generally trade at a permanent discount to tangible book value. So there's going to be a long way down, but I still think it's a high probability that they relax the SLR.
And if they do that, the banks will probably initially rally on that, and we'll be shorting the crap out of them at that point.
What's the kind of the top 1 or 2 banks that you want to own in the midst of this cycle we're going to?
I'd rather see the eyes and teeth of a recession and an acknowledgement of credit defaults. JP Morgan's an obvious one. I mean, I think we all sit here card-carrying lovers of Jamie Dimon, whatever he does. I always go back towards the consumer finance names. Capital One, not right now, but maybe in American Express, I would like to see it go lower, mainly because I love the credit card business within the banking system. And in generally, they tend to be the most cyclical. So they get hit the hardest. So the stocks go down the most, but it's arguably one of the more resilient and highest ROA businesses the banks have. So those are the things that I'll be looking at, assuming they get hit.
And they don't have this sort of same acute funding shift that the big banks do.